All right, everybody, this is Adam back. I'm going to give us an update on the levels that we drew out for the previous video, and just how do I look at them. And I always go back and I take a look at how they performed. So I'm starting off on the 5 minute chart. I just want to see how well were these levels respected. And remember, if you didn't watch the last one, feel free to just to refresh and see kind of how the thought process went. So we went to the weekly and the daily charts. We're here in the present, but I also went back a pretty far ways in order to get some ideas on where these levels should approximately be, and then kind of move them around once we got more into the present day. So what I want to look at here is how these reacted. I noticed that it reacted better to this exact wick level, which I believe I added because, or I had it right here because I wanted the bodies of that one. So I'll just keep in mind that this is probably a more relevant level, at least for the time being. Make that 405.75. And then the next thing, I'm going to note that this level is key here, as we had a big rejection there in the middle of the day today. In fact, I'm going to move it down to about 404 so that we catch the bottom of that wick and the tops here. Um, I really do like the way that this 401.65-ish area reacted, but what I'm going to do is move it up so that we're catching kind of across the top of these wicks and then across the top of these. And then this 398 level, it wasn't all that significant, but I want to move it, I think, to here. And then I'm going to make another one right here. So we have plenty of levels to the upside. I don't think that's where our concern is going to be. I think our main concern is to find significant levels to the downside. So first off, we need to mark low of day, being looking up top. It's exactly 396.50. So that's a level that we'll need to keep in mind. Additionally, once the market is about to open, I'm definitely going to mark pre-market highs and lows. Those are pretty relevant ones. For the sake of this video, I did not, because I wanted to just leave this untouched from from the previous video. So I want to go to the hourly chart and again do sort of the same thing that I did a while back, or that I did last video, and I'm going to scroll a while back just to get some ideas. So pretty much all we have is what we got over there plus this gap. I mean, we have the gap fill. That's about it. So the only data that we really have to work with is what we were given today, plus this gap, and then plus these levels here. So I think the next one that I'm going to consider relevant is probably 394. And then I'm going to go down here to mark this at 393. And then I'll mark the bottom of that gap to, well, I'll do that, but I will make it a different color, knowing that it is just, I'll make it white, knowing that it is the bottom of a gap. Next one I'll mark is the top of this wick, which actually works with the top of this one too. Who knows if we'll get this low? I mean, we very well could. That's only $8, so it could definitely happen. So my main process is I'm just looking for these outlier wicks. So let me make this gray. The outlier wicks, right? Because those are the ones that get just a weird respect that maybe it doesn't make sense. But these are, these aggressive move points, these, I call them outlier wicks. Those are the ones that usually get respected pretty well. Like you can see this right here. Sure, it was probably only there for a few seconds. However, it gets respected again here. So definitely going to keep that level in mind. Now that's the first thing that I'm looking for when I'm putting these levels together. So the next thing I'm going to do is just kind of inch my way down. I'm not going to try to do it every 50 to 75 cents. More like looking in the dollar range. Um, More thinking, this is a little close, but I'm noticing this wick here and then the top of this consolidation area here that kind of stands out a little bit to me. I wouldn't consider that one incredibly significant, but I think it's better than nothing. Here, I'm noticing this kind of the top of this range, this wick here, the body here, um, and I'll probably give myself one more. I'll make sure this one feels rather significant. So I have this here. I'm going to move it down because I think, what's the exact low? The exact low is 386.92. So I'll move it up to 386.90. And then we have the top of this wick, the top here, the bottom here. This looks like a pretty solid one, and then maybe just one last one that really just as one that I would say is incredibly significant. Let me zoom out a little bit. Probably one that goes across the top of these. Yeah, I'll mark that there, which it doesn't really gain that much respect over in these parts, but I think it's important enough over here that we definitely need to mark it. So now let me go back. So what I'm looking at here, and I'll go back to the 5 minute, how could we have played these levels? To me, now that I have them mapped out, I know that the gap, or filling the gap from the gap down to the previous low of day, we should have known that that was a important level. I mean, we opened here, we went up and tested it. We tested it 3 or 4 times, so that's obviously relevant. We don't get back to that level, but we do have this level mapped out, which ended up being the low of this first candle here, and then we reject there. So I know that this is going to be a solid one. In fact, I could put one here as well, and I might. It is a little bit close to this one, but I'm going to still keep it just in case I need it down the road. But my main play here would have probably been noticing the rejection here, possibly playing puts off of that. I would have had, I don't know if I had this line or not, but either way, you can see, okay, that's low of day now. We'll see how the tests come later. What we do notice is another 2 more rejections here, and then finally a 5-minute candle breaks out and confirms over it. That would be sort of a thought, okay, maybe we could be breaking this trend line here that we could draw. We could be breaking this trend line upwards. I would think maybe if we came down and tested this trend line again and tested low of day and then bounced, that would be a pretty safe way to play calls. But here we sort of confirm over this level but then fail back again. So I'm saying this level is very strong. We need a pretty strong aggressive move above it in order to be confident in our play. So we do get that here and here, but then we see these test the low of the first candle, which is this level that we already had, and then, or maybe I added that one. Anyway, either way, it's tested 4 separate times. So in a series of 20 minutes, you see that it just refuses to break this 404 level, which is also a round number. Psychologically, it's going to be tougher for it to get over that. So what we can learn from that is, hey, that's going to be strong. We also notice the test here and the test here. So this we like this level, this 402.58. We know that could possibly come in handy later. So it'd be good for us to put that one on the chart. So we fail back down here. We get more rejections. So basically, we could have just played this level 1, 2, 3, 4, 5 times during the day. Just off of this one level, just kept playing rejection puts, and then we saw that the low of day got tested here again and bounced. So we know that we're really range trading here. So our best move would be to just, if we acknowledge that we're range trading, take puts at the top of the range and then take calls at the bottom of the range. And the important thing is that we recognize that the theme is the bounces and the rejections, because once we get, one, two, three different examples of that happening, then we can reasonably say, okay, we can think that this could possibly happen in the future. So, but to minimize our risk, what we can do is we can take our puts right on this line. That way, if it crosses over any significant amount, we can just cut for a small loss. Same thing here, take our bounce calls right on the line, right on our level, just wait and have a very patient entry. Our downside risk would be small, very limited. And that's the kind of play that we're looking for here. Toward the end of the day, we know that things are going to be a little bit more crazy, so we do see that this level gets respected again, the one that we have from earlier over here, and then ends up fading very, very fast and hard. And then obviously we get a low of day test. We're thinking, okay, say we did take calls here, we could just cut under low of day being here. Say, okay, I'm cutting here, and then just continues to fade, giving us some new levels that we can work with going into today. So if you all appreciate this video, the last one, I'm happy to continue updating this chart and seeing how these play out. Again, I think the most important thing here is to try not to have too many lines in your chart. I mean, I have a lot of lines on this chart, and I usually do. But I want to know, if I'm entering a position in SPY, I'm not going to be taking profit after $2. I'm probably going to be taking profit after 50 cents. So I think 50 to 75 to $1 can be good increments for finding your significant levels. So practice doing this yourself. Maybe for the next one, just have your levels mapped out before you even watch the video, and then see how we compare. So hope you all enjoy, and let's have another good day. Don't get caught in the chop.